Australian Stock Exchange listed company called Novati. We specialise in payments. I look after the division that has alternate payments, cross-border China payments, as well as stablecoin. So for us, stablecoin has been a natural progression within the payments ecosystem, and so we, as you probably may have seen in some announcements, are launching an Australian dollar stablecoin, the AUDD, and that's why I'm on this panel representing FinTechs in this space.
Great, thanks, Evie. Nigel.
Hi, good afternoon. Nigel Dobson, Banking Services Lead at ANZ. My responsibilities cover enterprise payments and operations and strategy. And we've also launched an $1 DC stablecoin back in March, and we think that is the fundamental building block for the token economy, which I'm sure we'll talk about during the course of the panel.
Great, thanks, Nigel. Ursula?
Hi everyone, I'm Ursula McCormack. I'm with King & Wood Mallesons. I'm a lawyer by trade, and my practice is based in Asia mostly, but now dual basing with Sydney. So a lot of my work is in the Asian markets, worked with the Chinese government, the Hong Kong government, and now with the Bank of International Settlements on CBDC projects up there, and more recently working with some of the banks down here on looking at their stablecoin products as well as some of the crypto exchanges on their solutions.
Great, okay, thank you. And for my part, I'm a partner at K&L Gates. My practice is financial services, fintech regulatory issues as well. So lots to dive into today. Alice, we might start with you. So the Reserve Bank, obviously like lots of other central banks around the world, is in the midst of a CBDC research project, or research projects. Can you tell us where you're up to, what the thinking is at the moment, just how open your open mind is about CBDCs?
Absolutely. Thanks very much, Daniel. Look, our open mind is very, very open on these issues in terms of the way forward for CBDCs. What I would say is today, we're not yet convinced that there's a public policy case to, say, issue a retail central bank digital currency in Australia. The reason for that is pretty simple. We have a modern and pretty efficient payment system. People can make cheap, fast and safe payments in Australia. If people want to use a central bank currency, there's still pretty good access to cash. And there's plenty of innovation going on as well. If you think about the adoption of digital wallets and also all the great work going on in fast payments using the NPP. So it's not clear yet that we need to add to that a retail central bank digital currency. The story's a bit different on the wholesale side. You could imagine at some point in the future there could be a wholesale CBDC that could assist with the settlement of tokenised assets, for instance. This isn't a world away from what the Reserve Bank already does with its real-time gross settlement system. We have exchange settlement balances which financial institutions can use to settle wholesale transactions. So it's not a huge leap from that form of electronic money that's already out there to a wholesale CBDC. But in any case, we want to make sure that Australia is well positioned for the future here. So we've been doing quite a bit of research on central bank digital currencies over the past few years. Several of our projects have been focusing on proofs of concept to really explore technical and design issues around CBDCs. We're pivoting now to really answer that public policy question of whether there's a case for CBDCs by looking at potential use cases. And that's very much the focus of the research collaboration that we recently announced with the Digital Finance CRC to look at use cases for CBDCs in Australia. The plan will be that we'll issue a pilot CBDC. So this is a step up from the proofs of concept that we've done so far, in that it would actually be an actual claim on the Reserve Bank. Our plan will be over the next couple of months to put out a white paper that describes the platform in a bit more detail, and then we'll put out an expression of interest to industry to find out what sort of use cases that you would like to test on this platform. We've got a very open mind, whether they're wholesale or retail use cases. The one thing we would ask is we're particularly interested in use cases where you can't implement that easily just using the existing payment system. So we can really get at that question of, do we need a CBDC in Australia? So we're really looking forward to engaging with you all. Feel free to come and have a chat to us over the next couple of days. You can also register your interest in the project on the website of the Digital Finance CRC.
Great, thanks, Ellis. And so for you, Nigel and Effie as well, I mean, do you see the role of a CBDC at a retail level in Australia?
From well, look, we're obviously keeping a very close eye on your research because we do want to understand where you may end up in that retail space, because I think from our perspective, we think that the private industry and the private sector is probably more suited to the retail space, you know, just based on the role we currently play within the payments area. So a wholesale CBDC, like you said, yep, we want to see what the outcome is and whether that makes sense. From our side, a retail CBDC, probably a stablecoin might be the outcome or the output that we believe would play a better part in that space for digital tokenisation. And I think, you know, even, you know, Philip Lowe talked at the G20 saying basically that token payments are probably better suited to the private industry and stablecoins, as long as there was a regulatory framework that could support it. And so that's the thinking that we have at the moment.
Great, thanks, Evie. Nigel?
Well, yeah, look, I agree with Alice. I think our traditional payments industry is pretty well evolved here. And so it's hard to make a case if you think about a CBDC as a payments instrument. And as I said in my opening, you know, we look at our stablecoin as a building block to the token economy. So it's built to interact with other digital assets natively in the venues that where those assets exist and wish to trade. And if you look at the crypto markets right now, you know, 50% of the traffic in crypto exchanges is in stablecoins, right? 50%, billions of dollars. So there is a demand for these, but there's also a place for these as well. And I think that's the right way to frame this up. I'm not sure that there is a case to be made for CBDCs. I think there will be one, I'm sure, or two, but they're most likely to coexist with stablecoins issued by commercial banks and non-banks, who probably have their focus on interacting with digital assets, particularly where their customers have a need for tokenisation.
Yeah, great, thank you. And there'll be lots more for us to say on stablecoins. But before we do that, Ursula, I might throw to you, with your practice across Asia, how are you seeing these issues play out differently in Asia?
Yeah, let me start with the unifying factor. And the unifying factor is that all around the world, you know, governments are experimenting, banks are experimenting, and they're experimenting because there's a need to innovate money. How it's expressed, how it's transacted, how it interacts in the digital economy, that's really building and blossoming all around it and not interacting all that well with traditional fiat. And so that's the unifying factor. And in some advanced markets that have got, you know, amazing payment rails, the need for further innovation into a CBDC, you know, is less persuasive than it is in markets that lack fundamental banking services or even banks themselves. So if you look at the Pacific, for example, you have archipelagos of hundreds of islands with not, unfortunately, an ANZ branch, you know, locally there to provide the necessary cash, or frankly, some of the internet infrastructure that's even needed to take that next step. But generally speaking, what we see is that most jurisdictions are starting to look at either the opportunities that are posed by creating a central bank digital currency, or on the flip side, they're looking at the risks of not doing so, or the challenges and headwinds that they're facing. So for the opportunities, you know, it might be digital economy engagement, it could be things like even breaking the hegemony of the US dollar, which can be a really persuasive point, or it can be things like bribery and corruption controls in certain markets. So in terms of then the what, we have some markets like mainland China pursuing a retail central bank digital currency. Europe as well, looking very closely at retail, each of those for different reasons. So in the case of mainland China, you've got very strong capital controls that exist. You had market bans around crypto that were implemented in 2017 and a really intense focus on stemming bribery and corruption, using payment rails for things like Belt and Road and so on. But even then, you have a system that relies on banks. It's still not a direct relationship that you have as a holder with your central bank. And that's where I think that the overlap into stablecoins becomes super important, which we'll discuss. But the other key trends that we see are also jurisdictions that are agnostic. or looking for those use cases. So Japan's a good example where it's set down principles for its experimentation. It's recognised the ongoing role of cash, which is still very critical to the Japanese economy, but while considering how it might experiment. Hong Kong, on the other hand, has put out a global fast-track program, and one of the subsets in a competition-like format is to develop use cases as well as technological solutions to issues like privacy.
Yeah, fantastic. Okay, really dynamic space. Thank you for that insight. Nigel, just on the stablecoin. So, I mean, you've talked about ADDC. Can you talk to us a bit more about what's on the horizon for ANZ in this space?
Sure. Look, as I said, the purpose of ADDC is to interact with digital assets, and we've already done a number of experiments. One is with a company called Convergence Tech, which was a government-funded piece of work for a POC on the distillery industry, where the manufacturing alcohol was tokenised for the purposes of sending messages for the payment of excise tax to the ATO, which was also a counterparty in the experiment, and our stablecoin was the means of payment. So what that demonstrated was a real life example of a supply chain, a physical supply chain, where tokenisation, smart contracts, and automation can play into a much improved supply chain process and taxation process for the ATO, and our smart contract coin was able to deliver that excise tax to the ATO. So that's just a real world example of how better, faster, cheaper can be achieved with a number of services and parties interacting. And the other one we're very passionate about is in the sustainability space around the tokenisation of carbon credits. And we believe this is a market that not just will become more important in the next few years, but also needs to mature. The infrastructure in the carbon markets is disparate, it's not standardised, and it's pretty, we do carbon credits today OTC, like 1983 on the phone. And so there's a lot of room for improvement in the carbon markets, both here in Australia and abroad. So the tokenisation of carbon credits, when we work with a company called Better Carbon, and they have tokenised ACCUs, Australian Carbon Credit Units, and we did a transaction using, again, our stablecoin to buy and sell a tokenised ACCU. And we think that's an example where tokenisation can play not only a role for improved distribution, but also transparency and the build out of infrastructure. And then the second order piece across that narrative is the emergence of NFTs. Now, they've already emerged, clearly, but in the carbon space, we are looking to go all the way back to point of origin of the carbon, right? The carbon offsets, and verify the credentials of the offset, the producer, and then tokenise that in an NFT, so that the buyers, the offsetters or the investors can say, well, not only do I have an ACCU, but I've also got one that came from Northern Territory Indigenous Carbon Network or something of that nature. So you can get that verified credential into an NFT and create a secondary market, which we believe will trade at a higher rate, a higher price than some of the standard ACCUs.
Okay, great.
Yep.
Thanks, Nigel. Now, Effie, I know Novati's also got its, got a project underway for a stablecoin. Can you tell us a bit about where you're up to on that project and use cases and so on?
Absolutely. So unlike ANZ, we actually, you're quite right, we're launching that soon. So basically, if I can rewind to talk a little bit about the fact that Novati has been in the payment space for over a decade. And unlike a bank, and as a FinTech, we've been dealing with a number of FinTechs, and not only in Australia, so to the point of the payment system here in Australia might be robust and easy and efficient as it is today. Our business also has a global focus. So we've been dealing in both cross-border payments, remittances, settlements, transactions that interact outside of Australia, and so that's where you start seeing some of those inefficiencies. And so what we're looking to do with the stablecoin, which again is slightly different, it's actually going to be on a public blockchain. So
is ours.
Okay. Permissioned?
Permissionless.
Permissionless. Okay. Sorry. Okay. So. Also ours then, yeah. So our focus and our priorities is basically augmenting the existing services that we're offering. We've innovated with alternate payments, whether that be QR-coded payments, voucher payments, the digital money, e-money, digital wallets, all of that sort of stuff. So for us, this is a natural progression to incorporate a mechanism by which, you can do stablecoin transactions between one, an AUD stablecoin and a stablecoin from another jurisdiction. So, for an instant settlement that doesn't require a 9 to 5 or a 5-day-a-week mentality, you've got a 24/7 autonomous access to making settlements and payments. And so that's obviously important for, importers, exporters, just the cross-border remittance space. So that's where we see our initial use cases will lie, and then we'll obviously expand from that. There are many of other use cases, and we're looking forward to, possibly participating in either proof of concepts or something that makes sense from a payment space with the RBA and other players.
Yeah, great, thanks, Effie. And you mentioned cross-border payments. I want to unpack that a bit, because I think what we're seeing at the moment is various different central banks looking at CBDCs on their own with different technologies and different systems, and obviously stablecoins. We've got 2 on the panel, and there will be a poll at the end, who's got the best stablecoin. But there's...
Well, ours isn't out. They're ahead. That's
okay.
Unfair.
So there's proliferation of different technologies. I'm interested in how we get to a place where there's interoperability, where cross-border payments are smoother than they are at the moment. So, Ursula, do you want to comment on how you're seeing that challenge being solved across Asia?
Yeah, look, so with stablecoins, they play a really critical role in, the virtual asset economy and in virtual asset exchanges. And some of the forces behind that are not only the benefits that they bring in terms of speed and atomic settlement, but also because, frankly, a lot of the exchanges have been debanked or just cannot access banking, and that's a reality and the topic of another session that Austrac is leading. But that's sort of one reality. But the upshot is that you have assets that can move very quickly cross-border themselves to be able to settle obligations or be able to trade or be able to temporarily hold value while you wait until your next trade. But also we see the likes of USDC and others used as the settlement layer for fiat end-to-end transactions. So the users on either side only ever see real money, fiat money, but at the back end you've got the transaction occurring with that asset. And if you look at even what XRP was intended to be, Ripple had the system around to kind of renovate correspondent banking, but XRP was intended at the time to be that settlement asset behind the scenes. So that's sort of a key one. But linking back into CBDCs, the other thing that we're seeing is the experimentation at the wholesale level is around settlement between central banks and commercial participants, including banks, at that central bank level. And that's examples of, like Project Dunbar, which I think ANZ was, or RBA was involved in, and then Enbridge, which is something that I've been involved in.
Yeah, great, thank you. Nigel, do you have a view about that, how the role that stablecoins can play in that cross-border payment?
Oh, certainly. I mean, Effie mentioned it, and I think it's really a profound point, is 24/7, and they settle atomically, right? Which I think was Ursula's point amongst many. But that's the uplift, right? Is that, decentralised networks don't need to go home and see their families at night, right? They just are always on. And they are, many of them are interoperable through EMV standards, and standards really matter. And that's why we went public permissionless, right? Because the ERC20 token that we issued can traverse a number of blockchains. So we can be blockchain agnostic, we can delve into a range of venues and help our customers who may have chosen certain blockchains for certain reasons, and we can deliver to their needs. And so I think that's really important. Standards, 24/7, and atomic settlement is where you get the cross, and in particularly in a cross-border scenario, where you get this massive uplift in operational improvement. So cheaper, faster, better. And I think that's where the direction of where stablecoins will be used in a corporate commercial sense in the future.
Yeah, great. Okay, thank you. Now, Ellis, we know stablecoins is an area of focus for regulators in Australia. How they might be regulated and when. Can you give us any insights of what you're seeing, perhaps in your discussions with other regulators?
Sure. Yeah. Firstly, I'll just say we do see potential for well-designed, well-regulated stablecoins to make a contribution to providing better services for Australian households and businesses. So we do see a future which could involve well-regulated stablecoins, but it's really important that we get the regulation of this right. There are potential consumer protection issues in particular potentially financial stability issues if stablecoins were to be used very broadly. And the issues we saw earlier in the year with the volatility in crypto markets, with the issues around algorithmic stablecoins, it's emphasised that there really is a need for a good regulatory framework in this space. So we've been working with the other Council of Financial Regulator agencies, particularly thinking about the stablecoins that could be used for payments. So these are the ones that have similar characteristics to currency or money. The philosophy we approach this with is one of same activity, same risk, it should have the same regulation. So in that context, when we look at stablecoins, they're pretty similar in their functionality to stored value facilities. So we think they should be regulated in a similar way. The approach we have to stored value facilities is really what we want to be able to achieve is a framework that can give consumers confidence that if they purchase a stored value facility, such as a stablecoin, that they'll be able to extract their value from it at the other end. Ways this can be done is by having stablecoins backed with high quality collateral, or they can be prudentially regulated in a way equivalent to the way deposits are. This is what can help to provide consumers with that confidence. In terms of the way forward, the Council of Financial Regulators thinks we should be incorporating the regulation of stablecoins for payments purposes in with stored value facilities as part of the work the government is doing in generating a licensing regime for payment service providers. And one of the big benefits of doing it as part of that licensing regime is it should generate the potential for non-banks also to be able to issue stablecoins in future which consumers can rely on.
Great, thanks Alice. And I guess that's another area where there's overlap between the work that Treasury is doing on payment service provider licensing, as well as that separate project around token mapping. And so you've got this overlap with stablecoins sort of sitting across both. So thank you for that perspective. You touched as well on sort of market issues. You can't have a panel about stablecoins without talking about Terra Luna. So, I mean, if you, Nigel, thoughts about how, has there been sort of fatal damage to the brand of stablecoins? How does that get revived?
I think sorry.
No, go ahead.
I think it just helps people differentiate the different flavours of stablecoin, and I think that we've been steadfast in our discussions with our regulators around how our coin works, and that it's fully cash backed, and that its par cannot be broken. I think the Terra Luna example shows a little bit of the hubris of the DeFi markets in advancing, perhaps doing a little bit of an Icarus moment, and look, good for them. That was an incredibly innovative concept, and for as long as it lasted, it was an extraordinary project. But then it didn't, and so these things all new technology must be tested, and even if it causes its death. And so we've used that example not only to contrast our stablecoin, but also to probably amplify the benefits of a commercial bank, fully cash-backed stablecoin being issued into the market for our customers. And I think that's how we've approached that.
I'm just going to say, wow, did anybody even know what an algorithmic stablecoin was before the Terra Luna thing? I mean, certainly when, and I'm sure even you guys, when you approached it, when you thought of the word stable, you went, okay, well, stable means backed by something that's transparent, that is, that people can see, that they can touch, that they can feel. And this idea of, rushing to market with an algorithmic stablecoin, whilst I agree, innovative, great, good run for it, but there's history when you've got 80, 90 years of a banking system and a share system that, you can work off data and you can work off trends and what have you. And then this guy comes out in the market and all of a sudden, the market just blows up. So I think it's been good because we've been able to start distinguishing, identifying, categorising and talking about what obviously we both believe is the right way to go with stablecoins. And I think it's a bit of a cautionary note to say, also with regulation, don't rush into it, get it right. So look at it from all angles, all perspectives, and it is new, it is still relatively new, so let's not rush to come up with a regulatory framework that might not suit the purpose. So and we're very open about talking with regulators about this as well.
Fantastic. Thank you. And I think that brings us to time. So thanks everyone for being here for this session. There's obviously lots more we could talk about in this space. There is another panel tomorrow looking at CBDC issues, I'm aware, and lots of other discussions, obviously, about changes to payments regulation throughout the agenda. So why don't you thank the panel. Thanks for your insights, everyone.
Thank you.
Thank you.
Thank you.
Yep, I think they're just over here. I'll get them up. All right, so our next panel is all about how digital commerce experiences are evolving for consumers and businesses. I don't know about you, but I live my entire life on my phone. Now I invest, I shop, I pay my bills and occasionally text my mum, but it's amazing what's happening in the world of digital commerce. And on the panel today, we have Jan McGrath, GM of Payment Operations, Product and Solutions at Novati, Carl Mohan, GM for APAC for Crypto.com, James Fuller, CEO and co-founder of, I don't know how to say, is it Henry or do you say Henry? I'm not sure. It's Henry. And Anthony Jones, Head of Innovation and Partnerships at Visa, is our moderator for this panel. Thanks, guys.
Thank you very much. Look, if you're in this room right now, it means one of three things. Number one, you really want to learn about digital commerce experiences and how they've evolved. Or number two, you were trying to get into the other session and it's already full. Or number three, you're looking for the bathroom and you're hopelessly lost. In which case, head out through the back doors and turn right and you will find it. Look, we understand that it's right after lunch. There's probably a little bit of food coma starting to emerge. So what we're going to do is we're going to play Intersekt bingo during this session today. So if you hear any of my panelists say the word ecosystem, metaverse, or process efficiency, I want you to shout the word Intersekt out as loud as you can, right? So let's just keep them honest from that perspective. Now look, I'm really honoured to have some really good friends of mine on the stage today, and this session really could have been called Standing on the Shoulder of Giants, I think, because they've all taught me a huge amount. But rather than me introduce them all individually, I'm going to ask them to tell you a little bit about their company and themselves. And I'll start with Jan. Tell us about Novati.
Yeah, hi. Well, I think Effie did a pretty good job in the last session. So if you were here, you've heard about Novati to some degree. But Novati is really about enabling businesses to make payments. So we typically help businesses who want to get into the payment ecosystem. Sorry. Hands up. Into the payment ecosystem using our licenses, we have a principal license with Visa, we have AFSLs, we have a number of other infrastructure issues that allow all that stuff to get out of the way for anybody wanting to get into the payments industry.
Perfect. Thank you, Jan. And look, unless you've been living under a rock, or perhaps even worse, don't have access to LinkedIn, you may not know the second guest, and that's Carl Mohan from Crypto.com. Carl?
Hey, I was gonna string a number of words with ecosystem, process efficiency, and the metaverse all together, but there you go. Look, Crypto.com, what can I say? We are the largest and fastest growing cryptocurrency exchange on the planet today. But a little known fact about us is also we are, in our category, the largest Visa prepaid card issuer as well. So it's a total intersection between crypto and the real world economy, and we're keen to power that.
Thank you, Carl. Now, I was going to make a comment about your shoes, but you've been,
Visa colours.
But you've been trumped somewhat by James. So, James, tell us about Henry, and your founder story would be great.
Oh, man. I won't go too far into that because it will take me a long time. But for those that don't know, Henry is an automated service for sole traders that takes care of all of their tax, all of their payments, all of their accounting needs. So we are one of Australasia's largest accounting firms, which is kind of depressing because I'm not an accountant. I do tech. But yeah, we process around $1 billion of payments a year for our customers. And my favorite stat is that we currently contribute 1% of the entirety of New Zealand's tax bill through our platform.
Wow. That's impressive. Really impressive. Now, look, obviously through the pandemic, we've all seen digital commerce experiences change really rapidly. In fact, it's quoted that we've seen about 7 or 8 years worth of innovation crammed into around 24 months. So those demands for new payment experiences have evolved really, really quickly. So I'm really keen, though, to find out what are the two trends that you are seeing within your respective businesses. And ladies first, Jan.
Okay. Trends. Definitely no holes barred. I would say everybody that we meet with has a new and fantastic idea. So no ideas out of bounds as far as I'm concerned. So I think we've all been locked down, had a lot of time to think about what we'd like to change about the world. And so we see a number of different opportunities come our way. And it seems to me everyone's very, very enthusiastic about what they see. What they do see, though, is that at the core of it is the need for payments. And it doesn't mean Visa, we're Visa issuers, but it means all sorts of payments. So it's appropriate that you hear about stablecoins. It's appropriate that we do MPP transactions. So we don't limit ourselves to just card payments because quite often cards are a value add. Just a bonus at the end of it. If I can do all this fancy stuff inside of my app and then mix that into making purchases at the point of sale, even better, right? So we see a lot of innovation. We do everything from BNPL through to transactions like Henry do through crypto. We do a lot of different transactions. So to us at Novarti, no holes barred. What do you want to do? We're pretty keen to work with anybody because we're confident that we've got the stable base of what you need for payments all set up.
Fantastic, thank you. James, what about yourself? Two trends?
I'd say the big two thing for us is, number one is speed, and that is speed of payments, but also speed of support, speed of platform performance technology. The payment speed is fantastic in one thing, but if your platform and your actual support team can't keep up, that really, that's so important, particularly from a consumer lens, where for some of our consumers, we're literally dealing with 100% of their income. So if we're not quick in every aspect of our business, then they're not happy. And then the second trend is really about richness of data. So richness of transaction data, richness of data being able to surface not just kind of flat data back to customers, but actual insights in the platform. That's a huge trend where people are starting to take more control over their earning and their spending. And they don't just want the number, they want why this number, how much is it compared to other people. So yeah, speed and sort of richness of data are the two things for us.
So speed and data. And Carl, similar for you?
No, it's completely different, actually. It's completely different industry vertical, but the two trends that I see that is really going to change the industry, right? And this is whether it's crypto, payments, whatever we're talking about today, including digital commerce. The first one is regulation, right? We've heard the RBA talk about it today. Regulators are coming in and saying, hey, guess what? We need to get involved, and it's no longer a laissez-faire approach to regulation anymore. And I think that's going to be a total seismic shift in how regulators treat not only crypto, but payments in general. The second is, the evolvement of payments itself, right? So the trend where we see is, Jen spoke about stablecoins. We see a lot of new methods of payment coming on board. And the reason being is, 2 years ago, if you came back, rewound back to even early 2019, and you told someone, hey, guess what? I think in 2020, we're all going to be locked up in our houses. The whole world, not just Australia, but the whole world is going to be locked up in our houses, and we'll not be able to interact with each other except through online methods. People laugh you out of town, right? But this is reality. So people's minds have shifted. So their willingness to accept new technology, new innovation, new ways of doing things is no longer something, I don't think it's going to work, to maybe it will. And for us, we see this shift happening in the digital asset space in terms of payments. So whether it's stablecoins, crypto-based payments, we definitely in crypto.com pioneering some of this space, and I think that will be the big trend.
Very interesting. Now, this one's probably directed more at James and Carl, and the question here is, payments, or traditional payments at least, is not your core business, and yet you've both decided to integrate card payment and card credentials within your product and within your offering. Now, what are the benefits to you and to your customers of having a card connected to your traditional application? James?
So I think for us, and again, just kind of quick recap on our market, it's all sole trader, self-employed individuals. So if you can imagine as their accountancy, what our platform does at the background is gets them tax relief straight away whenever they make a purchase. So in a traditional payment sense, that might be providing a receipt of some sort that our team will review, make sure that it's actually claimable. So that business jet ski is not going to fly, unfortunately, on our platform. You can swear, Carl, that it's for business purposes, but it's not. But yeah, if you imagine that the kind of cards product and being able to bring that to market means, back to that speed element that I talked about earlier, if you can get that data into the platform faster from the source of payment with rich data attached, then everything downstream becomes a lot easier in terms of getting that tax relief in the hands of our sole trader customers. So it's, for a bunch of different benefits, not least internal operational ones, but really just kind of getting it in front of customers who can say, look, no longer do you have to wait until the end of the tax year to get tax relief, to get refunds. You're literally getting them in real time.
Very good. Carl, same question for you.
Look, I think from our perspective, it's straightforward, right? So when we started our journey at introducing the card, AJ, the thinking was, how do we bridge the gap between this whole universe called crypto and this whole universe called traditional finance? If you rewind back to 2017-18, they were both arch enemies, right? The crypto guys were saying, hey, traditional finance, you guys are, dinosaurs, not going to survive. Traditional finance were going to the crypto guys, you guys are all vaporware, don't exist, not real, right? And our founders or co-founders decided that we need to bridge that gap. And the method we chose was the infamous Crypto.com Visa prepaid card. And it acted as a conduit to bridge those two worlds. And it done that perfectly, right? Utilization is high, customer satisfaction is high, and it's available. Over 80 million merchants accept them, right? So I think that the reason we chose that is to bridge that gap. Number two is ubiquity, right? Most of our consumers love the product because now there's something tangible they can hold in their hands. You think about the digital asset world, everything is intangible. I'm dealing with my phone, I'm buying, and everything is bits and bytes, and suddenly there's something physical that I can link back actually and say, hey, guess what? I own some crypto assets, and this is how I'm going to spend it with.
Excellent, thank you for that. And that bridge between traditional finance and decentralized finance kind of comes through that, right? Being able to leverage fiat currencies and link them back to your crypto holdings. Jan, from your perspective at Novarti, you see lots of fintechs, not just one use case here. So from your perspective and the clients that you see and the prospects that you see, how do you observe them integrating payments into their core platforms?
For all of them, it's about the consumer experience, right? So it is usually about trying to tie something back to convenience and speed. So I get your point's not lost on me on speed. I work in the operations team, and every project we deliver has to be done in 10 minutes, right? So I get the need for speed, and I think the need for speed comes out in the practicality and then the use of cards, right? They're everywhere. That's something the payment schemes have done really well. So I think everyone who comes to us has a need to tie back into that convenience world, and something that people understand really well and is readily available for sure.
And so to take that a little further forward, the end customer that's using these applications that your clients have developed and their payment needs, like what sort of user experience are they expecting when they incorporate payments into their platforms?
Definitely something that's about them, from what I can tell. So the personalisation or the feeling of personalisation, so it's all about the consumer's experience and the feeling they get from it, to the point where we're now seeing loyalty and rewards, or rewards in particular, being added to crypto wallets and so forth, because it's about the people and about focusing the consumer and focusing on them and making them feel personally attended to.
Perfect. James, are you seeing the same with your small business and micro business owners when they use the platform?
Yeah, it's a similar thing. I think the convenience is a huge thing for our users. These are people who are usually incredibly time poor, and for the last God knows how many years they've had to kind of dredge themselves up on a Sunday to do paperwork. So when you're giving them an alternative that says they don't need to do that, everything has to be about convenience. It has to be everything in one place. It has to be seamless. And some of our best customers, and this will shock some of the engineers in the room, some of our best customers never log into the app, and we don't want them to, because they genuinely just don't care about the tech. They care about having the service in the background that pays their taxes automatically, lodges all their tax returns. They don't want to log in. We don't care that they don't log in. So when we think about experience, it's offline as well as online experience, and really prioritizing the fact that someone being in our app 6 times a day all month is not necessarily a sign of success.
Interesting. So you actually don't want them to use it. You want them to get the benefit from it instead.
Totally. Yep.
Carl, I'm a user of Crypto.com. I've got the app. There's a lot in it.
You got the card as well?
And I've got the card. Now, there's a lot there. So what kind of user experiences do your customers demand?
Look, we've got a unique customer segment, right? And unlike, Henry's customer segments where they don't want to do because they're busy doing work, our customers want to interact with our app. So, our job is to make it super simple, easy, and make it really enjoyable for the customer to use the app. So whether it's buying, selling, holding crypto tokens, buying NFTs now, right? Or enabling payments for the whole lot, right? And in fact, we find our customers on average open the app 6 times a day. And funnily enough, first thing when they wake up, and last thing before they go to bed, right? And so the whole experience has to be enjoyable. Now, we also have built in a number of things in the app to, educate those customers, to actually increase that, make it a lot more fun for them to learn new things on the app. So the engagement factor is a bit different than Henry, I suppose.
Very interesting.
So
Now,
you can see the variation we have to deal with.
Absolutely.
When you're providing an infrastructure. So at the end of the day, if you're a company like Novarti, you deal with that extreme constantly. So it's hard to pinpoint what I see as a trend, right?
Yeah.
Other than speed is probably at the centre of a lot of it.
ever changing.
Yeah.
We've touched a little bit on payment technology, and I think it's fair to say over the last 10 to 12 years, we've seen a huge amount of evolution in payment technology, starting with magstripe, or magnetic stripes on the back of the card. We then moved into chip and pin, and then we've moved towards contactless and then mobile enablement, and now virtual cards, instant issuance virtual cards as well. Of those technologies, Carl, what are you leveraging today, and what problems are they solving in terms of on-ramping and off-ramping funds onto your app?
AJ, I just got a small plug-in because yesterday I was, I think most people do surf channels on Netflix. My wife hates it because I just flick through, watch a little bit, I switch off, watch a little bit, and I'm just switching, right? And I came across yesterday while I was working, working from the telly, came across this show called History 101 on Netflix, right? There is an episode on credit cards. And the payment geek on me got like, oh, I got to watch this. It starts with Frank McNamara and how Bank America changed to Visa. And you see this evolution. It's amazing, right? And we're seeing that increasingly more. Now, for us, I think the off-ramp part's the easy part. We have chosen a number of off-ramps, say whether you're buying, selling, holding, or just purely love using our Visa card. Then the off-ramp that's the pathway. We see a huge number of our customers, when they liquidate assets, they don't choose to take it out into the banking system. They store it into their fiat wallet and they spend it away, right? Because ultimately, why do we invest? Because we want a lifestyle, not to leave it for the kids. Sorry, my son would hate me for this, but the truth is, I want to live life, right? The second part for us is, again, we consider ourselves, in a way, an e-com marketplace, right? It's a trading platform where people could buy and sell crypto tokens, crypto assets. Then the on-ramp is critical. We have loaded every single potential, whether it's direct payments through the local fiat rails, or you could actually purchase through your own Visa, debit, or credit cards on that. So the more payment options we offer, we see the greater take-up. Now, the converse is we've applied that same thinking into enabling that for merchants. So merchants today, if you think about what they can accept, they accept your debit, credit cards, that's given. Increasingly, you see them, adding BNPL. If you go to Kogan, there's like 20 different payment options, right? Now, why would you list that? Because a lot of merchants have realized that the more options you provide, the greater your conversion rate. And we recently launched, Crypto.com Pay, which is the ability for consumers to actually pay directly with crypto.
So you're creating a competitor for me, is that what you're saying, Carl?
Complementary.
Jan, what about your clients? What are they looking for in terms of payment technology?
Everything, right? So all of what they said. We see, definitely, we do issuing and acquiring, so they're always at the core of anything in traditional payment network schemes. We also see a lot of MPP, so a lot of account-to-account payments is becoming really high demanding. Henry would see that a lot. People want to be able to shift their money and not necessarily to a stored value Visa card. In terms of that documentary you watched, I was there when they started Mag Stripe cards, so I was probably a dinosaur in the background and went around the world telling everybody about chip technology and everyone looking at me like you're mostly looking at CBDC customers or people talking about that now, trying to understand, what the hell that is. But we see a lot of different payments and they get combined. There's no one solution fits all anymore. You need MPP, you need direct entry, you need everything, right? So we make sure we have all of that available to everyone.
You have to be the jack of all trades. In fact, you have to be the master of all trades.
Yeah, it's lucky a lot of us had banking backgrounds, so a lot of us started in banking and ended up in cards somewhere along the line. So that helps that you understand the banking side of it as well and how those payments work. Could they be jazzied up a little bit? Absolutely. NPP, everybody calls that fast. I'm not sure our customers would call that fast all the time. So looking forward to what Pay2 does and so forth. So obviously the evolution of some of those payments as well will be really good and really important to the overall experience, I think.
Thank you, Jan. And James, you're just starting on your payment journey, so it's an exciting time, but what are the capabilities that most interest you for Henry?
Yeah, I mean, it's exciting to me that $1 billion annualized in payments is the start of my journey, so that's good. But no, it's similar to what Carl was saying about optionality, right? It's so important with the breadth of our customer base that is everything from gig economy workers, e-commerce retailers, tradespeople, freelance graphic designers. If you think about all of those people, all the way through to like real estate, NDIS, disability support workers, they might be using online platforms to get paid. They might be running a market stall. They might be invoicing their clients. And if you imagine all of the different varieties and optionalities of payments that they need in order to run their small business, we can't be held lacking on those. And a lot of the time, whilst we can push forward with innovation from our side, a lot of the time it's the customers that come to us. Hey, I need plugins for this e-commerce site. Otherwise, I'm not going to be able to get paid as quickly. Or, hey, I need online payment gateway for every single invoice. And so for us, it's about staying ahead of the consumer and the sort of small business trends about how people are getting paid. So, you look at things like people running market stalls. That's a really exciting place for us. And actually, this is something, those in-person payments, whether you're a personal trainer or a psychiatrist, that kind of point of sale side of things is very exciting when you start to look forward and go, how do you really deliver a full stack payments ecosystem?
That was a mouthful.
It always is.
So obviously here at Intersekt, I'm sure there's a lot of entrepreneurs sitting in the audience today. So what piece of advice and what learnings would you like to share to the audience? Jan?
Well, I spoke to some of our clients to find out what was the attractor to working with somebody like Navati. Obviously, it's our experience and our knowledge is a big bonus to a lot of people. So there are a lot of people inside of Navati with a broad set of experiences in payments, working around the world. Most of us have all worked globally. We all understand the payment system globally. So I think stability and some confidence in you and your understanding, and our open-mindedness to not pigeonhole anybody. So we've never looked at a suggestion or an idea and gone, that'll never work. We might do that in private now and then, but the client would never know that. So our openness to work with everybody and in whatever field they're looking at is probably important for us. Our speed and our responsiveness is absolutely essential. No one's got time to waste. And I think with the clients I spoke to, having fun with us has been the most exciting part for them. They're saying at any time it's always been enjoyable working with you, not a hard experience. So don't forget there's meant to be fun at the middle of this, and if it isn't, then probably don't do it.
Exactly. James, you've become a really successful entrepreneur with Henry. What are your learnings?
I think I always talk to people about resilience, and I think back in the day, like 2017, when we first pitched the idea of automating tax for sole traders, some people reacted like Jan might have said there, and they laughed at us, and they said, that can't be done. They said, people have tried to do this many times before, no one can automate accounting. So having the resilience to go, actually, it can be done, and we're going to go and do it. That was a really important thing for us. And any founders, and I don't consider myself an entrepreneur, right? Like Claire and I started the business with a couple of spreadsheets at the dining room table. Like we started literally from nothing, with a one-page website and $100 in Twitter. That was 5 years ago now. So talking to people who are just starting out in that journey, it's about kind of going, you're going to get knocks, and there are going to be people who laugh at you and say your idea will never work, but you have to push past that. And that's what will help you be successful. Because if you curl up and die every time someone laughs at your idea, then you're not going to last.
Carl, has anybody laughed at you? And I think I can probably answer this one based on the merch that you're wearing today.
I think if there's a day that I don't get laughed at, then I'm not doing my job, AJ. Hey, I was thinking about that question about, what lessons that we learn. And, I'm very lucky that, I get to talk to both Chris and Rafa, the two primary co-founders in Crypto.com, almost every week, right? And the ethos that they instill in the entire organizational culture, and I think one that I totally buy into, is responsible innovation, right? So there's a lot of innovation out there, but actually innovating responsibly as entrepreneurs, I think is important. James, you're a good example of that. Totally understand the customer segment. It's a responsible innovation, right? The second, for us at least, and increasingly, if it's in the digital commerce world, both security and compliance is going to be paramount. If you don't build information security from day one, then the chances are, you're going to be facing into trouble in 2, 3, 4 years' time when your business is scaling up. And the final one, compliance, like I was saying, AJ, regulators are no longer taking a laissez-faire approach to a lot of this innovative development. So having that compliance mindset and actually building a product that is meeting regulatory requirements is absolutely critical.
Thank you. Last question. I'm sure the audience is relieved. The last question I'm going to quote Bill Gates, who said, "Most people overestimate what they can do in 1 year and underestimate what happens over 10 years. So with that in mind, if you're at Intersekt 2023, so 1 year from now, what do you think will have changed in your specific industry, Carl?
Oh, for sure. The first one is regulation, right? I think that's happening 100%. And I think that's going to be a more coordinated approach to regulation as well. We see that in Australia already. We see that in the region. I think that's going to happen. That's guaranteed. The second one is, in my mind, it's going to be crypto payments adoption. I think that's going to skyrocket. And that could be driven out of a number of factors. One is folks that really are crypto natives and believe in it through the metaverse or other platforms.
Intersekt.
But the introduction of stablecoins and CBDCs are going to drive that adoption. So those are the major two for 2023.
Interesting. James, what about your industry?
I think in accountancy, there hasn't been a lot of innovation for like 20 years. There was some good software that came out that benefited accountants, but I think what we're seeing is a bit of a revolution where it's becoming about the individual, the consumer. And so I think we'll see extreme amounts of automation. And actually, I think we'll probably end up seeing a seismic shift where accountancy as a profession becomes more about business advisory than about processing. And we've started on that journey, and people keep asking us, you're going to do companies, you're going to do trusts and partnerships. And I think it'd be really exciting when we start to see a real kind of breadth of providers in the market that are literally doing all of the heavy lifting. That means that people who are trained accountants can actually go and advise clients, not have to process receipts and shuffle paper.
Thank you. And Jan, final word for you.
Yeah, and for me it's about keeping abreast of all of that regulation and making sure that we can stay nimble and keep moving forward with the market as fast as it requires us to. I'll be personally really interested in the cross-border space. In 12 months, I hope they're up here getting a lot more say around how all the enablement of all this other stuff is going to help us with cross-border payments and moving money around the world a lot easier than we currently do.
Thank you. Now, unfortunately, we're at time. Otherwise, I would love to continue chatting all afternoon. I'm sure we will outside of this session. But if you'd all like to put your hands together, please, for Jan McGrath and James and Carl.
I'll just settle everyone. If everyone could please make their way to their seats, we'll get started on our next panel. All right, we're going to get started. We'll wait for everyone to come in, but we'll get started. So our next panel is all about open data enabling future customer experiences. And with us today, we have the team from Data Action. So we've got Alex Stefanovic, we've got Alex Yen, we've got David Cook, and our moderator, Victoria Hannaford. And joining the Data Action team is David Fedor from AWS. Welcome to all of you.
Hello. Am I on? Great. Thanks so much for joining us today. I'm super excited to be here. Glad to see all of you in the audience. This is actually the launch of our white paper, Open Data and Future Customer Experiences. It's launched this week. We're really happy to bring it to you here as part of our panel discussion today. And I know a lot of people have a hard time fidgeting, like, on your phone during these sorts of sessions. So I've got something for you to do with that. Download our white paper. It's at da.com.au, and it's a great read, and you can read along and join in with all the themes that we'll be covering today in our discussion. So quick introduction. There are 2 Alexes and 2 Davids on this panel. I'm Victoria. I'm the communications manager. So if you talk to us afterwards, you've got like roughly a 50% chance of getting the right name. So this is Alex Stefanovic from Data Action. This is David Fodor from AWS, David Cook from Data Action or DA, and Alex Yen from DA. So thank you all for joining us. As I said, we want to have like an open, creative discussion about what happens next as open data and CDR rolls out across various industries, and talk about some of those exciting customer experiences that you can develop and really try and move the conversation beyond the regulatory situation that we're in right now. And we want to, get beyond those challenges, get creative, imagine and capture those interesting future use cases so that we can build towards them and become more open across industries, partnering with each other. And I think really key to all of that is not being afraid to iterate. You don't have to build the biggest experience in one go. You need to start slowly and build creatively towards something bigger. So, David, F, could you just kind of take us through a bit of a snapshot of the story of data so far beyond Australia? What's happening in other markets? Where are they at? What kind of use cases are they seeing with big uptake amongst customers?
Sure, Victoria. Is this on? Yep. I thought long and hard about how to tackle this because it's such a massive agenda and a massive story in such a short space of time. I think using some Amazon language in terms of the way that we think about things, we're really at what we call day one for open data, not just locally but globally. Locally, I'll come back to the situation under CDR, but globally, with like markets who are leading open data regimes under a regulatory-driven agenda, generally look at the UK and the European situation under PSD2 as the sort of the leading light in terms of where it's going and the maturity of that market. If you look at the stats, you'd have to say that participation in that market is actually reasonably good. There's now in excess of about 500 third-party payment providers in that market. In the UK alone, over 4 million participants in open banking. And I think in 2021 in the UK market, there was in excess of about 10 billion pounds sterling worth of transactions that were actually submitted through an open banking transaction paradigm. So, and growing at the rate of around about 300% year on year. So we would expect over the course of 2022 for that number to grow to somewhere between high 20s, early 30 billion pound per annum. Now, having said all that, PSD2 is very much a payments and action-oriented driven agenda. Ours is not. They are tackling a couple of the problems that I think we'll need to look at down the track, particularly around the requirements for re-authentication. They have a 90-day re-authentication process that is leading to some significant dropout in participation in open banking. So that's one sort of hurdle that we need to navigate going forward. But having said that, I think that after a very slow start in that market, the momentum in API calls and value transactions that are occurring is actually now getting some critical mass. Coming back locally under CDR, obviously the last couple of years has been very much a data out focus, heavy compliance oriented agenda. We're only really now seeing organisations turn their attention to data in any way, shape or form. But I still feel that CDR and open banking and beyond that open finance in this market is really a solution looking for a problem at the moment. Elizabeth Kelly, who's driving the review of the CDR program at the moment, has said it's now up to business to create consumer value by developing an innovative CDR products and services. And I think that's a really good indicator that market forces now need to prevail and lead on the basis of finding that true transfer of utility between consumers and those organisations that are looking for access to their data. That's what we're looking for. So I think a long way to go. I'm really interested to see energy come online this year, and then beyond that we've got the papers out for non-bank lending, and then beyond that insurance and superannuation coming in to really start to create the critical mass of open finance beyond just banking. So we'll wait and see.
Yeah, I guess there's a lot of questions about how to bridge that gap, and I guess one of them is like you've got to create that value, you've got to create those use cases. And Alex, that brings us really nicely to something I want to ask you. So, you know, if you strip away all the complication, all the legislation, and you put the customer in the spotlight, what happens then?
I think it's a really good question, Vic, and I think it really ties nicely with what you've said just before, David. Really for us, when we tackle this question, or when we look to talk through the white paper in its creation and the reading that came with it and all the rest of it, is customers today, or even ourselves internally as an organisation, the mind share and the space, time, effort and resource taken just to do the legislation component of it, to dot the I's and cross the T's, and it's absolutely needed and warranted, but to do that has taken up a lot of time and space in the brain for customers looking to get those outcomes. And I think now as we sort of start to tick off some of those items off the to-do list, you sort of step back and think, okay, well, what's next? And really for customers, and even the conversations that we're starting to have internally and customers approaching us within DA, is what's the possibility? And so I think there's a macro view as well as a micro view within that. So there is an interest and there is a growing appetite in terms of understanding what is actually out there and what's that possibility. Because once we zoom out and once all of these things start to come into play, there's a lot there, and it's hard to provide or hard to know where to go in some cases. There are, I guess, a spectrum of customer kind of readiness within this space, this industry, and sort of beyond. And we look at it particularly from a sense of, well, on one end, you have customers who are maybe just starting within the cloud process, and that's new for them. And then on the other side, you have those that are ready for, you know, your robot overlords to come in and take the day. So there's everything between that spectrum to try and manage. And so what we look at from that perspective is being a little bit more led in the sense of, I guess, mentorship, providing that scaffolding for those ideas to grow, and even leading some of that use cases within this space. And so as we bring it down to the micro sense of that word, is really customers are asking us, well, what can we do today? It doesn't have to be revolutionary. It doesn't have to be these whiz-bang products that are going to save the day and you know, start a new world. It's really looking at what is, you know, the downstream impacts, what are the customer pain points, what are the frustrations, and what are the use cases that exist, and how do you help smooth some of those frictions and some of those processes that exist today. And you kind of overlay the concepts that are coming to light more and more, and I think it's also about the education as well. So taking some of that fear, the hesitancy out of it, and we start small to build trust and sort of go from there. And in the white paper, I'll give it a bit of a plug, but I won't give it all away. We do talk about some of these use case experiences. We kind of categorise them as 4 critical categories. In no way, shape or form is that, you know, the end of it. It's just something that we've observed to date. And so the main 2, I guess, that are probably more real for customers in this space is those around around smarter startups and smarter access. So really looking at the onboarding and the activation processes as key critical items for customers today. And it's not about, again, taking something brand new. It's about looking at the environment, at the ecosystem, all the points that exist today. And some, you know, exist as little islands. Some need a little bit more integration, and others are connected to an ecosystem. But how is that sort of end-to-end look now, and how can we sort of update and uplift those processes going forward? And, you know, you've got things things like the facial recognition coming into play? How do you take the digital footprint and increase that? And how do you maybe start to merge and blend potentially the online and the branch experiences as well? So really, as a consumer, at the end of the day, wherever I stop or wherever I pick up, it should be something that I could, keep on doing as part of it. And the other one within that that I think is more nice, I guess it's nicer from an overall point of view, is the mindful money. And that's really talking about the more conscientious investor, saver, spender, whatever use case persona you want to overlay on that. But they're really looking at how can we bring to life those ESG principles that are becoming more and more important in the world in which we operate today, and taking some of those use cases and bringing them back into the fore. And it might not be the best initially, but we have to start somewhere. And CO2 emissions and kind of bubbling up and raising that data and that information and presenting it, even though it might be reactive in the first place, I think it gives us a starting point to start educating, to start changing the conversation, and to start changing those discussions with our customers, but also their end users, to get them thinking about this world in a different way and being okay to share and accept that data as they kind of work through that. So I'd like to see the CO2 stuff take that next layer. Tell me at that point of sale, or even as I'm making those decisions, show me what that decision actually means downstream. Am I going left? Am I going right? Depending on what that is. So for me, I think overall it's around building that trust initially. It doesn't have to be whiz-bang products. I mean, it definitely can be if they exist, but I think it's starting small and looking at those use cases that exist today and sort of smoothing those transitions as we go. Thanks, Vic.
Thank you. Alex and I worked really hard on the white paper, and it's really we must be big data nerds, I think, because it's a really creative process thinking about these use cases. And it's, the sky's the limit, really. So I do encourage you to download it and give it a read. A lot of hard work went into it. David, Cook, your turn. What do you think FinTechs, we're at Intersekt 2022, and it's like a FinTech conference. What should be top of mind for people in this space, in this industry, as part of this?
Yep, thanks. So I think the last moderator stole one of my favourite quotes, which is a Bill Gates quote. The quote goes, it's you always underestimate or overestimate what you'll achieve in 2 years and underestimate what you'll achieve in 10. But he missed a very important bit at the end of that quote, which is don't get lulled into inaction because of that. And I can think of a couple of things that come to mind for me in the time I've sort of worked in FinTech. So the first is 2016, I went to a conference in Singapore, the Singapore FinTech Festival. They were expecting 800 delegates to go to that conference, and it took about 2 years to organise it. And by the time they held it, they had 4,500 people show up. And the Monetary Authority of Singapore, who were the sponsors of that, really struggled with actually running that conference at that point in time, but it was a fairly generic conference. At the time, FinTech in Singapore was one floor in one building out to the western side of the island, and by the time they ran that conference the following year, they had 13,000 delegates. FinTech in Singapore was about 11 buildings, including a 25-storey office building in the centre of Singapore. And the Monetary Authority of Singapore had actually completely changed their operating model in terms of how they dealt with FinTech. So they actually split the business, so the regulatory side of the business operated separately, but also together in a sense with the innovation side of the business to help FinTechs engage in the market. And that actually came back to some of our regulators at that point in time. The reason I bring that up is because in the space of a year, that exploded in Singapore. So like I said, you can overestimate what might happen in 2, but what might happen very quickly is those use cases that Alex is talking about will come to the fore, right? So if we think about data sort of being the modern currency and all user experience is built on data, it really just comes back to that value proposition that exists for people. What is the job to be done that requires that data that results in that experience? And that's sort of the key thing. And all of my observations of FinTech with time are just that it'll just pop on you before you realise it. So one of the last speakers talked about resilience and sort of getting through things. I remember being in a federal treasury panel for distributed ledger technology back in 2016. I've actually seen a couple of familiar faces in the room. And we were just spitballing ideas around what might be used in terms of taxation and finance and banking, and there's a whole bunch of different ideas, and that resulted in some work that was done by Data 61. But then it sort of went quiet for a couple of years, and as you've probably seen, crypto and all the things around DLT sort of really exploded onto the scene. So it's just another really good example of just be prepared, and the regulators are equally unprepared, is my experience. And it's just knowing how to work with them and understand they're going through the same growing pains that you're going through, and just be resilient and work through that, particularly in financial services where it can be a little bit more difficult to get through, I guess, those initial stages.
Who drives the change when it like accelerates to that extent? Like, can you identify, or can you see into the future when those kind of prevailing winds are coming?
Look, I don't think you can see into the future. I was at a session this morning where someone said something along the lines of, they were talking about a myth about open data, and the question was, do consumers engage with open data? Is that right? Is that right? And the reality is consumers don't engage with open banking or open data. Consumers engage with the use cases. So you really just have to go, I go back to it, right? The value proposition is, what is the job that client is, or that customer is trying to achieve, and how will data support that, and really just start hedging bets on that basis, right? And that'll lead, I guess, to the outcome. And you're not going to win all the time, but that's just the nature of that sort of business.
Thank you. Alex, a very big question to you then. Like, in terms of enablement, how can we really activate the sorts of things we want to see happen within the industry, and especially when the ecosystem is going to be very large, it feels like?
Thanks, Vic. You asked me to come up with a joke about open banking. This is the best that I could do. Knock, knock.
Who's that?
Open banking.
Open banking who?
And that's what consumers would say. But I guess we have to get ahead of the game. We've got a pretty strong and mature FinTech environment and community here in Australia. Been working with screen scraping technology for many years and delivering great experiences and products. But at the moment, there seems to be limited open banking initiated use cases out there. That's because I think, again, it's they're waiting for the CDR to surpass what they can actually currently do through screen scraping. But the banks who have been currently under a lot of obligation pressure to offer up data holder are probably looking for fintechs to help them enable their own ADR capabilities. And I think it's a great opportunity for fintechs at the moment. I think if they have the right product, I think the timing is kind of perfect.
I mean, I think really what you're talking about there is partnership, and it's big and small partnership. Like when you're talking about some of the big four, they need to lean on some, really innovative, smaller companies that would fit into that fintech bucket. But I suppose I feel like amongst the people who are here today, I think partnership is going to be the future for sure. How do you sort of view it?
And I could take a DA lens on that. Our clients themselves, they want to differentiate. They want to be unique. They want to do it now, and they want to do it at low cost. And we know that partnerships are key for that, because taking 12 months to develop and bring something to market, it's not acceptable anymore, and the expectation is like months, if not weeks. Right? So that's a challenge for us, and as I said, partnerships are key. What we're looking for in partnerships are innovation, and speed to market, and maybe like a cost model that suits us and our clients, whether it's aggregated cost model, success-based cost model, or we've seen some companies overseas offer their services for free, and that's probably the best cost model that I can think of.
Thank you. David Fodor, I wanted to throw back to you, because I mean, I am not from a traditional tech background. It's been part of my history for a while. But as I said, I've brought a creative lens to this. And to my mind, it feels like for some of these use cases that it's about reverse engineering. Is that possible? Is that the way to do it from your perspective? Like, is that a good way to design? You come up with the experience and you find a way to make the tech work for you?
Yes.
Done.
So, short answer is yes. We at Amazon believe it's the best way. It may not be the only way, but we believe it's the best way. We have the saying, unless you know otherwise, it's what we do. For every product or service that we bring to market across all of our lines of business, we run a process called working backwards, which is exactly what you described. It's not new. It's nothing. It's not rocket science. It's basically just starting with the end in mind. We solve for 5 questions. Who is the customer? What are their problems or the opportunities related to that customer? Does the idea that you have actually go to solving those problems or adding value to that idea? How do you know that what you'll develop is what they want? And only then do you then go and design the customer experience around that. It really prevents you doing a lot of heavy lifting, a lot of journey mapping, and then coding, and then packaging, and throwing that over the fence to your marketing team to go and take to market, only to find that actually there's no demand out there for what you've developed. We run that process, and then we run it to an MVP, or what we call a minimum lovable product stage, and then iterate on it from there. So I think in the context of open data and the future of what customer experience looks like, that is the methodology that we bring to the table for our customers who want to invest and actually tip capital into that market. There are some really, I think, primary use cases that are just still screaming out to be solved for in this market. I think one thing that's not well understood and regarded about this market versus other mature banking markets around the world is just the nature of our credit bureau experience today, and the additional value that open data brings to the information that is available for consumers when they're applying for credit. So I think there's still a lot of value that we can get out there, just even there, before venturing into other, related use cases beyond that. But in short, to answer your question, absolutely. As I said before, it's today, in my opinion, a matter of CDR being a solution that we've now got to design some real, inventive problems around for it to actually feed into.
The original reverse engineer, basically.
Yeah.
So the kind of use cases you're talking about, they're kind of like first order priority for you.
Absolutely. And I'm from a hardcore credit risk management background, so I still see the value in risk and pricing as being one of the primary spaces to get a high ROI on any investments that we make in open data. I know it's a contentious area though, because anything that you do with respect to bespoke risk and pricing comes with it an element of, is that really the right thing for customers who are at different ends of the risk spectrum? But from a consumer experience perspective of demonstrating that you have a depth of knowledge about what they are, particularly from a behavioural sense in terms of their transactional behaviour data, it's really a bit of a no-brainer.
Well, could save a lot of pain for people in a time of like rising interest rates and things like that. If you,
There's no better time now. We've been living in a almost zero cost of capital environment for so long. Now is the time to reinvest as the cycle reverses. Absolutely.
Yeah. We are very close to time. Alex, I just wanted to know what is like top of your mind in terms of use cases? Like, what do you want to see happen first? Is it in that ESG area? Is it Internet of Things? What gets you excited about open data?
Open data, I think there is those standard basic ones that we just need to get right, and I think you're absolutely right, David, in that sense. I like to come at it from a different angle, maybe a little bit more from a lens of IoT, and that's a parallel that I sort of draw with that kind of item when it comes to open data in itself. So I kind of look around, and I'm not the only one, everybody's sort of in the room. You've got your mobile phones in one hand, you've got your watches that no longer just tell the time, they tell you everything about your life. You go to the roads, you've got your cars, you get home, your smart devices, left, right and centre. And so I like to play with the idea of the fridge being smart, or being smarter than it is today. And so for me, I kind of look at it with the sense of a product development sense of how can I include things that are meaningful to me but also seamless, that are just taking the boring, dull things and letting the robots handle it, basically. So I look at the smart fridge, and today your fridges, you can do a grocery list. So what if in this new future that we look to move towards, if that fridge now has pocket money? It has the change to do the basic ordering for you. It's smart enough to connect to the comparison websites and, Coles, Woolies, whatever it is, Aldi, wherever you shop, it does the shop for you at the best price. It orders that, groceries wherever local, and it's waiting there at your door. I think we need something to help us put that away, but at least it gets to your door. And it's more just not a completely revolutionary item of, hey, the robot's going to go shop for me and I'm going to come back and everything's going to be done. But it's more of the sense of these things exist today. It's how do we stitch it together to create some of those nice, delightful, seamless experiences that are innocent, but also put that trust out there from a consumer's perspective. So not quite banking in the traditional sense, but something a little bit further out than that, that is potentially real and tangible today.
We're very close to time, so lightning round for you, other David and other Alex. What kind of use cases would you like to see kind of kick off? What makes you think this could be an exciting product or experience?
I just think the right access coming in eventually is going to be a game changer. Having one organisation being able to close off another account and open up another account with a third party, it's going to be endless possibilities, and especially when you start introducing the other sectors. And I just think there's endless opportunity, and we're at the very start of it, so it's pretty exciting times. And we're going to be leading the world on a lot of these things, so I think it's going to be interesting to see. I mean, there's a lot of smart people in the room and building out these ideas, so we want to connect and be able to, meet you and have a chat to you and, and try and help us on our journey to get and to achieve our goals.
Great. Final word to you, David.
I've got a family friend, and she's just got a new boyfriend, so we got a bit on a tangent here.
I like it.
And he had a very expensive car that he rolled up to our house in, and then I found out that he actually lined landfill sites. So that, to me, and my experience sort of suggests that sometimes the best opportunities are in the really unsexiest areas, and they're also sometimes the lowest risk areas, because they're the things that other people don't want to do because they're just too hard. So sometimes I sit back and go, is it really in PFM and some of those applications, or is it more in, counterparty risk in sort of bigger transactions, or is there something in that space that might make more sense as a lower risk option and probably a lower exposure option from a consumer perspective, especially in light of the Financial Services Royal Commission? I think that creates some real sensitivities around consumer. I just wonder if there's something in that space.
Thank you. Thanks so much, everyone, for joining us today. As I said, if you want to download our white paper, we've got a very short URL, da.com.au. We are a core banking services and solutions and digital services and solutions provider. We've been in the market for 36 years. We just had our birthday. We're so young, so much potential. And thank you so much. We really are excited about the future. We think partnership is key. We think trust is key. We think that consumers need to learn to trust through these exciting experiences that we're hoping to develop. So come and say hi if you see any of us around. Thanks so much.
Okay, so our last session before afternoon tea, we're going to be hearing all about payments as an experience. What experience exactly? Well, you're about to find out. And joining us on this next panel is Ian Kelsall, from ThoughtWorks, Christian Westerlind Wigstrom from Maneuver, Mark Ledsham from Currency Cloud, and Camilla Bullock from the Emerging Payments Association. Take it away.
Thank you very much, and thank you for setting the scene, pointing out we are the last one before the break.
Make it long.
Yeah, this one is going to be a good one, though. And so just quickly, so you know where I'm coming from, I'm running the Emerging Payments Association in Asia. So we're really having a regional conversation on what's happening in payments and bringing our members to the table to find common answers, best practice, and speak to regulators. So our focus is policy and advocacy. And it's my first Intersekt, so I'm very excited to be here, and I've had some great conversations already. And how could I not be excited with this master panel I have here? And when we had the chat before, I also said we need to have quite a high tempo, and we needed to be really sharp, because we have some of the sharpest people in Australian fintechs in the room. But before we dive into it, I'm going to do a quote from Albert Einstein that I think that many of you have heard before. And that is, if I just had 1 hour to save the world, I would spend the first 55 minutes in defining the problem. And then I would go and find the solution. And from our sitting and observing a lot of companies, both small and big, I think they are spending too little time on defining the problem. They're running down this innovation route to find down, oh, maybe we should have gone there, or maybe we should have partnered here. And it's really important. So hence, the first question to the panel is going to be, when we're talking about the payments experience and we want to make payments into a good experience, what problem are we actually solving? So, Christian Westerlind Wigström, I was going to do that with the perfect accent because I'm actually also Swedish, but then I lost it.
It was a very good Swedish accent.
Thank you. CEO and co-founder of Maneuver. Also want to say congratulations on winning the award for the best FinTech organization of the year.
Thank you.
So, on to the problem. How would you define it?
The problem is not a single one, because it will take different forms depending on what exact flow you're talking about. But the overarching one is one in which increasingly consumers in all our forms, whether it's us here in our more sort of civilian lives or people who don't care about payments ever, other than when they do them 7 times a day, is that we generally come to think of payments as being part of the experience of the product or service that we're buying. So previously it was probably fine to think of the good and service you bought, and that could be good or bad, and then the payments experience being separate. But increasingly, a problem for merchants and others who make services and goods available is that the payments part of the experience is now brought into, it's integrated into the experience of the good and service. So unless you have a really nice way to interact with your client on everything, from how you describe your product to how you explain who you are to how you get paid for selling this thing, I think you're going to lose out to others who are better at that. So payments as an experience is ultimately going to be making payments less and less of an experience. No one is interested in payments. I know I don't like handing over something I don't want to part with. And the merchant knows that because I don't like it, they don't really like that experience either. So the problem is, how can we make payments less like payments? And the reason it matters is because all of us interact with this every day, all the time. And we know what happens when something good comes on the market. We all tap and go. We all do the thing that is the easiest. And all of a sudden, the one who has tap and go is where you go, rather than the one who says, I take cash only.
So with one sentence, the problem is saving time or not making it an experience?
The problem is that we all expect and deserve better. And unless you deliver on that, you're going to lose to those who do.
Yep, yeah, I think that's right. I read some stats on about 75% of customers would leave a company if they don't have a good experience. So if we have that experience being the payments in it, it's really important to get that piece right. But Ian, you are the consultant at the group. Yeah, you are probably very well used to defining problems, I hope at least. working for ThoughtWorks. So how would you define this?
Yeah, I'd agree with Christian around like sort of the pain of paying is something that you really want to eliminate as much as possible and really focus on like how do you make that either an experience that disappears into the background entirely, or if you can add value in that experience, that it should be really demonstrable to that end consumer. So like in terms of, I don't know, so I'm very glad to say like being part of ThoughtWorks and like 10,000 consultants globally, sort of canvas broadly, like what are the sort of the pain of paying that people have across our consultants. So I got about 400 responses. Like a high proportion of them are actually around like what product managers in sort of either e-commerce experiences or in sort of payment experiences at the end stage would perceive to be like sort of incidental UX experiences, but a lot of these sort of compound into becoming really frustrating experiences. And I think that's really only been exacerbated over the last couple of years where the conventions of how we pay have changed and there are more options of how we pay. And so all of those sort of grains of sand or paper cuts are sort of adding up and really frustrating people now in terms of it's not particularly consistent, the experience that you have between different contexts when you're paying. And so those things should be probably addressed more concisely and looked at like how do you look at that more holistically and go, are we really improving this experience to, from a merchant benefit, actually get to the conversion, but from a customer benefit, they actually make that purchase and go, I felt really good about that.
So if I turn that into a sentence, could I say the problem is that the experience is not good enough?
I think it's that the focus of like where like product managers are looking to improve the experience is not like, there are probably more hygiene factors that they could look at first before trying to overload added value features on top first.
Okay, yep. That sounds good, defining. Mark has flown in from London, so welcome to Australia.
Thank you very much.
He's from Currency Cloud, and congratulations to your license here in Australia.
Yeah, we recently got our license a couple of months ago now, and we're not far off getting our Singapore license as well, so we're coming hard into the APAC region.
Fantastic, and I read, recapping on who they are, the gentlemen, so I didn't get anything wrong, and Forbes actually said about Currency Cloud that they are the secret pipes behind most fintechs. So that was a very cool quote you had on your webpage. The problem?
Yeah, look, I think I agree with everything these guys have said. I think the way I would have a slight nuance on what was said was more that essentially no one's actually making a payment, right? No one's going somewhere to do a payment. They're doing something else. And the payment is ancillary to that. And you've got to make sure that that capability is either invisible or completely embedded within that process, which is essentially what you guys said. And I think part of the challenge comes that you have businesses where their core capability is selling a widget and they're trying to make a payment experience for somebody. And I think actually where you'd be better off is leaning on the experts on creating that so it can become invisible and it can become part of the experience. And I think maybe part of the problem is that the end providers of those services don't necessarily think as well about that problem as they could do. So I think the problem is how do you enable customers to pay seamlessly in an environment?
You want to add something?
Yes, please. So Camilla has given us right, by the way, to interrupt each other and jump into the conversations because generally it's more exciting. Just two things. In an earlier conversation that we had, I think you made a great point, Mark, that I didn't want us to lose, which is no one wakes up in the morning and says, today I want to pay. Today I want to part with money. What you want is always that other thing. You want to buy something, you want to get something else in return. So payment really is something we all actually want to be without. It just happens to be something we need to go through in order to get the thing we do want. So I think that's one core thing that, as we from Manuva certainly position have been talking about for a long time, is that the best maneuver is sort of a dead maneuver for some people, in the sense that we exist just so far in the background that even though we wear aqua, you don't have to worry about what we do because it just happens. But the other point I think is that also picking up what you're saying, in lots of other areas of doing business, we're used to thinking of that as something you outsource. Like you don't start a business and say, today I'm going to build my air conditioning unit myself. No, you get someone to build your air conditioning unit for you. You also don't say, I'm going to build my own email server. You get someone else to do that, and you insource that instead. Payments ought to be exactly the same thing. It's not something that a lot of us have this intuitive or even the resource intuition or the resource base to build very well. So you ought to do that with someone who does that and only that, so that you power the thing that you're actually in the market to do.
I have to disagree a little bit, though, because not that I love paying, but I think a good experience is not just anymore just doing what you think it's doing something more. If I'm going to talk about it and I'm going to be out, it's something more. It's not just being fast, it saves me time, or it just does that extra little bit more. So I would actually like to stretch the experience. Is maybe not, we're going to come back with this with invisible experience or non-experience, or what we should call it, don't know the difference. But first, just looking also at when we're developing the best experience, I think you sort of touched on that, all of you already. What makes it difficult for you to deliver the best experience now? Is it anything that stands in your way? Yeah, I can go to Ian first, maybe. There.
I think so what I talked before, I think a lot of payments experiences within organizations sort of get built up in sedimentary layers. And it doesn't get cleared out. It sort of continues to exist. And so a lot of the time sort of either accepted wisdom of how something should be in place remains, and therefore that's how it gets implemented, or it has to work through large parts of the organization to change those conventions and make it simpler. As I think we all know, it's like making something really elegant and simple isn't an easy task, even though the end result ends up looking something like it doesn't exist at all. So I think like a lot of that isn't necessarily like the effort to actually sort of clear the decks a little bit is often something that organizations don't really want to go about, and so it just gets another layer added on top, which then it can become a substandard experience over time.
And Mark, in your effort to enhancing the experience, do you have anything that's limiting you or slowing you down?
Look, I think from my side, my background, is predominantly in international payments, and that's a very complex area. You're stitching together different payment systems, and you're essentially sitting across verification, money in, money out, how you give customers choice on how they're sending money in, how they're paying it out, how you're making people feel the pressure of verification when they should be, i.e. they're a bad actor, but not when they're not. So I think over the years, the barriers that have been in the way of it have got lower from the point of view of technology has enabled a smoother experience. And I think it continues to evolve in that way. I think probably one of the biggest barriers that we have as a non-bank provider is the infrastructure in some regions. How that's evolving, how that's coming about. A good example I always talk about is you see providers from Australia and the UK where actually the digital payment infrastructure for locals is not too bad, and it's improving. There's open banking and all that good stuff that's enabling. You pick that up and take it to the UK, to the US, and think, right, we can do that. That infrastructure is just atrocious. And so you have to think of different ways about how you can facilitate our aim is ultimately to get to real-time payments, right? Because it's where you can shorten that speed, that time, and make it easier and cheaper for the customer. And so you've got to look at different ways of how you can do that. You then start to bring in multiple providers, so you can almost have like a closed loop network in an environment where there isn't a real-time payment capability. So I would say the barriers are getting lower. But there needs to be creativity about how you overcome barriers if they are there.
Yeah, that topic of interoperability is my favorite topic all the time, and how we need to have the standards, but also make sure we're not shutting certain players out. But I'll keep that for another discussion. Christian, do you want to add to how are you enhancing? Is it anything that's standing between you and the perfect experience?
Of course. As be naive to think that what we have now is the best it will ever get. Part it's time and infrastructure that's available in where we operate. knowing that they are getting better. The infrastructure is available. I mean, with Pay2 coming on, that is sort of removing the last bit of the Middle Ages out of the 21st century and turning it into something that is truly quite great, I mean, in what you can do with it. And without the underlying infrastructure, we can try hard and we can do closed loop systems, and that does work. But we also know that closed loop systems sooner or later are sort of having a knock on the door in the middle of the night, and someone says, wait a minute, we don't really understand what you're doing. It seems a bit too avant-garde to, let's bring it back to what we know. So that can be an issue, and that, I guess, speaks to the second one, is infrastructure isn't just technology. Infrastructure is also regulation. And infrastructure at some more far-fetched level is also education. So I guess problems can be of different natures. One problem is you have a problem, you have a headache, you want a pill to get the headache to disappear. But problem can also be that you're just at a suboptimal equilibrium. You might think you're fine until you realize, oh, I can do this other thing. It's so much better. I had no idea. And it's sort of not a problem in a traditional sense, but it's a problem once you understand what you could do instead. And so payments fall sometimes in between those two. It's probably problem in the first way when it comes to international payments, because most people think, oh God, it takes 7.5 years for money to show up somewhere else, and by then it's only half of it left because the rest was in fees. But problems in that second way of, like, probably most people think direct debit seem to work most of the time until you do Pay2, and you think, oh my God, I was fine with this for years. But there's something else I think that we probably should touch on quickly, which is this is all, I mean, I think we've defined a problem in a quite a cool way, slightly differently, but all coming to something that sounds cohesive. But it's the magnitude of this as well. Given that payments is so ubiquitous, this is not just something that should matter to a few people in a small number of rooms. This is something, because I certainly know that by the time I meet a person in the morning, unless it's my wife or my children, they have transacted. They've gone on a bus, they've bought a coffee. At every instance, there is an opportunity for improvement. So the collective impact of some of these improvements could be massive, and some of it even regards just trust. If payments require a lot of trust, that's either between people, between systems, and if you can create that trust, I think what you'll do with it and how you increase exchange of ideas and goods and services, we can be totally utopian on that point.
It's actually funny because you're segueing without knowing into what I was going to say. So I look a lot at the wallets in Southeast Asia and how they are used and what they mean for people there, and we don't have it here. And recently, Meta and Jio in India launched this shopping list on WhatsApp. And I felt like that's what I want. And the segue is that I was such a late adopter to WhatsApp that it was ridiculous. All my friends kept on asking, why don't you use WhatsApp? And I was like, but I have messaging. And now I am a late adopter. That's why I do this job really well, because I understand the slow people in the back of the line. But Ian, why do you think, I think super apps and that whole experience you get in a space where you trust and where you spend a lot of time, why is that so slow to come to Australia?
I think there's this market in particular. I think Australia has had a rich history of introducing payments innovations, and so as I said, there's this broad range of payments experiences that already exist in this market, and so there's as you've said.
I have to say, have we? I have to question that a little bit.
So I would say, so for your example, in terms of WhatsApp, there's a lot of things that are good enough until people experience better. So I think that exists in the Australian market. There is a lot of good enough, or people perceive them to be good enough experiences. Whereas in the other markets, such as China, Indonesia, Malaysia, so Thoughtworks has had the opportunity to work with Gojek and Grab in the Malaysian and Indonesian markets. You've got a combination of giant population sizes, so scale, so it makes it valuable to solve these types of problems, but you also have had a giant leap forward in terms of that experience. So as soon as those types of experiences were introduced, they were even beyond 10 times better than what was previously available. So I think for something like that to be successful in Australia, that the value that needs to be created needs to be beyond 10 times better to get people to switch. As I sort of talked before around people get very settled into their payment conventions and where they shop and how they shop. So I think there's definitely opportunity in the Australia market. So seeing some of the players that CBA is pushing to buying e-commerce, startups, We've got examples like Finder, where they're pulling in embedded finance experiences into their app. We've also potentially got the influx of like Cash App entering this market. So I think there's opportunities for those types of things to particularly establish, but I think they really need to then contextualize like the experience for the Australian market to go, what is it that will be the really coring strategy of that super app that will pull in more people into it? Because at the moment there isn't really, as we've sort of seen with Revolut, there wasn't, as a super app that has entered this market, there wasn't that coring like superpower that brought more people that they could then build these added services around.
Yeah, you almost have to fall into it, or the benefits have to be really obvious. Because actually, did you know this wheels on the suitcases came in 1972, and the wheels has been invented for 5,000 years?
Yeah.
Wheels on payments is something I speak about. If you want to know why that was, you can come and speak to me afterwards on my theory. Mark, what was I going to speak to you about? I was going to speak to you, what do you think will happen in the B2B space? Because we've seen a lot in B2C. What do you see?
Yeah, I think, interestingly, one of the things I'd say, I think maybe why it's a slower burn into Australia is in those markets where you see the super apps. Those guys kind of skipped desktop, and they were straight on your mobile phone, and then you're kind of, your limit, you know, if you can get yourself on someone's front home screen. I mean, I've got 184 updates to do on my apps. That's how many I've got on my phone. But I very rarely scroll past my front page, right? So if you can get on there and you can get into one that's regularly used, then I think that is really where the secret's at. And it's interesting because we talked about payments, you know, kind of employing experts at payments to do the stuff for you, and that's essentially what super apps are doing, right? They're apps that have got high engagement from customers in the first place, and then they're building around that. So, you know, where I see potential for that kind of experience to start to play out are two different areas. One, the likes of Xero or something like that, where they're actually creating marketplace and you're just bringing in API layers for people, and actually it becomes a, you know, compelling proposition to use that trusted source to find your provider. And it fits really well with, you know, what Currency Cloud, as an example, do in terms of being the invisible pipes, because you aren't presenting as that. But I think another area that I think will be a very interesting proposition as FinTech becomes a larger portion of the environment is whether in the SME space you see banks themselves becoming super apps for different financial services. And opening up their brand and their brand pull to better API experiences provided by fintechs to give better experiences to their customers. And I think it's particularly relevant in the SME space because it's so underinvested in by banks.
It's interesting, so it's almost going back to that problem. It's not just defining the problem, it's also defining where do we spend our time and who do we trust, and then to integrate the problem solving in where we already have your eyeball attention.
Well, because you can also then present to, you know, I always used to say there's no one that knows me better than, I'm not going to say my mum, but it's, no one knows me better than my phone company and my bank, right? They know who I'm calling and they know who, and they know where I'm spending my money. And so you can then become much more bespoke as an experience about going, actually, you need this service, but you just don't know yet. And bringing in payments as an example, you know, and that capability that they might need within their environment.
I think I was just on the SMB space. I think it's really interesting around that. So you mentioned Xero. I think the like super apps in China, for example, that people do multi-home across like the Tencent and the Alibaba app because they're two closed loop ecosystems. So people have to be on both of those apps in order to pay people in both of those. For the SME space, I think it's really interesting because like Xero, MYB, or Intuit, people don't multi-home across them if you're an SME because like that's where your accountant lives. So it's a very natural like gravity point for all that data to exist. Like the CDR, I often thought like the small business market is actually much more applicable for around CDR because as a small business, you're much more likely to have much more diverse payment options that you're using outside your single bank. So yeah, I really see like the accountancy firms that really have an opportunity as well in the SME space.
I think that really brings us back to what we're talking about essentially is embedded finance, which is, again, the reason we call it embedded is because it's not the main deal. It's just disappears as part of the thing you're actually wanting to do, which brings us maybe back to the point you said earlier where you disagreed with me earlier. You say, surely there's more to payments than just making money move. And I agree with that, but the true payments component is the making money move. But then you can make it happen in a way that allows for a greater experience overall, which is generally because you're wanting to do something else. So whether that is inside your accounting software package or, you said it's your bank and your telco knows you best. Imagine if you brought them two together, they know you really well. You can create embedded experiences overall where payments is just something that happens in the background. Just like you're not going out that I want to use electricity today. It's something that you use because you're doing something else.
But you have some of those merchants also that see as they taking the payments, even if they're done making the payments, it's still an experience that could be positive. I think that's where I'm coming from. Yep. I'm not just thinking about Monova, I'm thinking also about where, even if I don't see it's you, I'm thinking of that interface is also the payments.
Yes, but it's not, it doesn't, it of course can be positive, but generally it's positive because the payments component of it is smaller and the other bits are bigger. So you get more data, you get better ways of interacting with your customers. The payments part generally is smaller, the better it is, because you can make more room for other things.
So talking about invisible payments and friction, so I shared this when we prepared for this panel where we had a chat, and I said, as you might have noticed, I don't love invisible payments. And I have my 11-year-old daughter who had no friction at all when she shopped at Amazon. And attention to detail, I noticed when it was 12, the 12th package arrived home, and I was like, what is all those Amazon packages? So what do you think about that customer protection if we really make payments invisible? Where do you think that, could that slow innovation down or?
Well, clearly in that case, payments were not invisible given that we're talking about it on stage in front of lots of people. So what it means, invisibility doesn't mean that there is no control. It means there's something you don't have to think about. But you had to think about this because clearly that payment experience was not invisible. It was maybe too smooth in that instance. So invisible means you don't need to worry about it. So you need to have controls involved. You need to have consent. Think about whether it's pay to or CDR or whatever it is. Core to all of those things, creating trust and earning trust is that you have authorizations around it and that people believe, I know what's going to happen when I interact with the system. I understand that if I leave the system to deal with it on my behalf, it's going to do it the way I would do it myself. So look, the fact that anyone can make a payment isn't necessarily a great thing, particularly not with someone else's money, even if it's your mother's.
Yeah, like the control element is really, like when we did the analysis for the MPP for Pay 2, I think like that was a really important point that people, the current direct debit scheme, people don't have the control of when those payments are going out. People don't know when those payments are going out, even if like some of the neos have done sort of scraping the transactions and can sort of predict it historically. It doesn't give people any control. They still have to then chase the merchant. So I think when you give people those controls, they can take action retroactively and go, actually, no, that payment's not right. So if you take an Uber and it cancels on you and it takes the payment, you can engage very quickly with Uber and go, no, don't charge me that $10. That person did not turn up, and immediately that money is refunded. You can have some retroactive control on that. So I think like those are the things that if you are going to implement any sort of automation in that space, you do then have to provide very clear, like how do you take action on that? How do you automate that? And it doesn't become something that is then an onerous paper-based, like call center-based system in order to be able to retake control of it.
I think it's really interesting actually because we talk about trying to make things quicker and smoother, and I remember when Apple Wallet came out and going, why would anyone use that? And now I never have my wallet with me. And my biggest frustration now is actually when you tapped your phone, you've got to wait about 5 seconds just to make sure that it's cleared before you can leave the shop, and that's my big frustration now, which is a real first world problem. But those controls you talk about, it's interesting you mentioned Amazon because in Europe and the UK, PSD2 brought in strong customer authentication, and lots of companies struggled with that concept. What we talked about is how do you make it smoother? How do you make sure customers aren't abandoning carts and all that good stuff? and so companies were struggling with how they were going to do that. And you look at Amazon. Amazon said, "We're not going to do it. We'll just refund them if it's fraudulent." So there's kind of they saw that friction could become a they put the control somewhere else, right? But they put the onus on you and the pain on you if there is a fraudulent transaction, which is not necessarily a good thing. You look at some of the, I think it comes down to how you create those controls in there that are pretty seamless. A good example is Monzo in the UK. Its two-factor authentication is on the app on your phone most of the time when you're doing you've always got your phone with you, right? And so it's just a very quick message where you put your code in very quickly. So I think creating controls around it that are pretty seamless to the transaction as well is possible. And so the question is, morally, are you obliged to do it? I think that's kind of where it starts to come in.
No, I like that. I like that. A little bit of friction. It might sound like I spend money, like I need somebody to control it for me. Anybody that does eBay purchases when they've been drinking wine, don't do that. Anyway, I keep on looking to see if I have a time somewhere. Okay, how much to? I'm so sorry. The audience wants to hear a quick question here?
We're only keeping them from coffee, it's fine.
Okay, really short. If you really need to leave, you can leave, but I will know who you are. So just want to check, if one thing that you would like to happen within the next year until you're here next time, or if you want to take a vision, something you want to see in 10 years' time. No. Taking either or, depending on what you want to answer. Something you want to happen now that we can talk about next year when we're invited back, or 10 years. Who wants to go first? Ian.
So I think I'd really like to see the ACCC's decision on Apple's NFC chip revisited on the wallet. So I think it's the 2017 ruling around like this was an emerging innovation. I think we're all past that now. I think Apple have demonstrated that this is an established technology and it should be opened up broader to other wallets. Because as we've seen within the App Store, Apple have a tendency to start to become the monopoly on those types of conventions. And although Apple do offer very good experience in those, I think there are opportunities for the fintechs in Australia to give a much more local flavour and to introduce innovation in that space.
That was a good one. I really liked that one. Perfect. Mark.
From my side, it'd be, particularly in the Australian market, would be just much more adoption of an acceleration of open banking and more so NPP for international payments as well. So just small little...
Is that a 10-year one or what?
We have a whole project on that one. So I agree. I want to see movement in that space. Christian.
I think over the next 5 to 10 years, my prediction is that we will have all online sort of consumer type transactions going to happen on some form of pay to. I think all other forms of payments are going to look crazy. They're going to look arcane, uncontrolled, slow, and just like the 1750s.
There's something I want to see too. So thank you, gents. This has been really interesting. As you see, time fly by. Thank you, audience, for staying. I appreciate it. And thank you, Intersekt, for having us.
They were really scared of you.
Thank you. Yeah. Thank you very much.
Thanks very much, everyone. You can head out and have some afternoon tea. See you back here at 3:30. Sorry, 3:30.